Hello guys, welcome to a new video. Welcome to my YouTube channel. How are you all doing? I'm doing good. In this video, I'm gonna go over the Fibonacci retracement. The Fibonacci retracement is a really famous tool. Everyone that is trading knows about it. I know not everyone uses it, but since when you are on the chart and you look at the toolbox, you have these tools. One tool that is always there is the Fibonacci retracement, right? So I was like, I have to make a video about it. So let's jump right into the charts. So what is the Fibonacci retracement? The Fibonacci retracement is a tool that helps traders find potentially pullback levels in a trend. Okay, that's why we use it. We want to calculate where a pullback is going to go to in a trend. The key levels are 23.6%, 38.2%, 50%, 61.8%, and 78.6%. And let me make this clearly, because most of the times in the chart it's not gonna say in percent, it's gonna say, let me do something also. Yes, wait, I'm gonna put this one for you guys so you don't get confused. So, like I said, 23.6%, but on the chart it says 0.236. It's the same thing. 38.2%, 0.38, 50%, 0.5, 61.8%, 0.62, 78.6%, 0.79, right? Don't get confused about this, it's the same. It's the same shit. So in an uptrend, you want to calculate it from a swing low to a swing high, and in a downtrend from a swing high to a swing low. So if I draw right now a little uptrend, we're gonna put the Fibonacci from the swing low all the way to the next swing high, and from here we can calculate where a pullback might go to. So I want you guys to know that if it's between 0 and like 0.38, you know, like this, let's say something, and then it continues up, it is considered a strong trend. If it's going to the 0.5, around the 0.5, can be a little bit more, a little bit less, and then it goes up, it's considered like a normal price, not too strong, not too weak. But if it goes all the way till here to the 0.79 and close to the 1, you know, then it's a weak trend, and it might be so that it does a reversal. Not always, of course, price can just from here go up, but it can also do like this, you know, from here and then down, you know, and that's how we calculate it. And the same thing is in the downtrend. In the downtrend, you want to put it from the swing high to the swing low, and from here we can calculate, okay, where is the pullback gonna go to? It's gonna go to here, and then continue down, yeah, and like this, you know, it's pretty simple stuff. So guys, well, why do traders like use these levels? The traders use these levels to place orders, to set stop loss levels, you know, and these things. And one thing you guys need to know, and I know I always say this with everything, but don't purely base off Fibonacci retracement, right? So if there is a pullback and it goes, let's say, to the 38.2, don't be like, okay, I'm gonna buy right now, because that doesn't make sense. Price can just go do a reversal or does something else, you know. You cannot purely base off the Fibonacci retracement. You need other confluences. For example, I'm gonna try to draw this. Let's say we are in a downtrend, okay? Downtrend, and we put the Fibonacci retracement from swing high to the swing low right here. Let's say that right here we have a fair value gap, for instance. Okay, fair value gap right there. In this case, then we have already two things. We know that we are on a downtrend. We know that price is gonna make a pullback. If price goes all the way here, and we see selling pressure out of it, it's safe to assume that the trend is gonna continue. So from here, you could place a entry, where is it? Short position, right here. So as soon as we see a candle close outside the fair value gap, for instance, you can put the entry right here, put the stop loss either above this high or above the fair value gap, target the next one liquidity wherever it will be. Like this, you could possibly use the Fibonacci retracement, but if you didn't have the fair value gap right there, then not. All right. Okay, guys. So this next part of the video is gonna be only for smart money traders. You know, people that trade with smart money concepts and ICT traders. So if you're not an ICT or smart money concept trader, you can skip to the end of the video. Otherwise, stay here because smart money uses the Fibonacci retracement different. Okay. First of all, they don't use these levels. They don't use the 24.6, the 38.2. They sometimes use this, the 50%, but not to calculate the pullback. And they do sometimes use the 61.8 and 78.6 and another one. So to start with, smart money uses equilibrium. Equilibrium is the 0.5 level, right? It's the half of the Fibonacci retracement. And just consider this as the line between premium and a discount. Okay, I'm gonna change I'm gonna take away this one and this one because we will not use it. I'm gonna leave the numbers for ICT traders. So equilibrium, like I said, it's the 0.5, right? It's this line. This line, that's the equilibrium. And like I said, it's just the line between premium and discount. Premium and discount zones, everything above the 0.5, so everything here, this is called a premium. This is a premium. Well, I don't have to write that actually. And everything below the 0.5, that will be a discount, okay? ICT traders and smart money traders, they use this often. And I'm gonna tell you guys one more thing. A lot of times, if we see a trend, let's say this downtrend, and price gets to the equilibrium, to the 0.5, more often than not, price can consolidate a little bit before then making a move wherever it wants to go. But 0.5%, there can be like a little fight between buyers and sellers, obviously. So it's not all the time, but a lot of times it starts doing a mini consolidation right there. So to finish this video with the OTE, by the way, I didn't say this, really important, premium discount zones. We want to use this because premium zones are considered a good area to sell and discount zones is considered a good area to buy. Okay, I'm gonna draw this. Look, if we are in an uptrend, and we put the Fibonacci retracement, well, if you look at the screen right now, where would you want to buy? Like, where would, if you think this trend is going to continue higher, right? Where do you want to enter? You want to enter in a discount, right? Discount is everything below the 0.5 level. So this area, like I said before, you want to wait for the pullback to reach this area, and from here you enter. Why they make this so small? Okay, from here you enter, right? You don't want to buy when price is here. Why do you want to buy there? You want to buy as low as possible. So first of all, you get a bigger move and a better risk to reward, right? And on the other hand, in a downtrend, it's exactly the same. If I draw a downtrend, where do you guys want to sell? You want to sell as high as possible. So in a premium, everything above the 0.5%. If price does like this, and why do you want to sell there? You're getting it at a super bad price. You want to wait for the pullback to hit the premium, and from here, why does it make it so short? Doesn't make any sense. And from here, enter, right? Because like I said, you catch a way bigger move. Imagine from now, you could just enter right here and take the move all the way till here. But if you enter right here, but then you're gonna catch a little bit. So that's why premium and discount zones, it's really used between ICT traders. Sell in the premium, buy in the discount. That's all you have to remember. Okay, and to finish this video with, the OTE is really famous, really much used between ICT traders. Like I said, it stands for optimal trade entry, and it's an ICT concept. And it's the zone between the 0.62, 0.705 and 0.79. Oh shit. All right. And why is the OT so considered? Why do traders have it in mind? Well, it's because it's where the pullback is most likely to draw to. Do you understand what I mean? So it's where price is most likely to retrace to. Okay. And I'm gonna show you guys an example of this, of the chart, but before that, okay. So guys, the OTE, like I said, is the zone between the 0.62 and 0.79. I know that the 0.715 you cannot see on the chart. You can see it in MetaTrader 5. Well, you also here, but I don't have it. I haven't put it. But yeah, the OTE is everything between in this area. And like I said, it's where the retracement is most likely to go to. So from here, most likely the pullback is gonna go to here. So if price is in an OTE, you can, and you combine it with, let's say, a fair value gap right here, this is a good trade. Okay, because that's the OTE, it's where price is most likely to go to. And if you have it right here and you're still in an uptrend, there is a fair value gap, and there is something else, there is a liquidity, an internal liquidity swap or whatever, boom, you can enter, easy, okay? And I'm gonna show you that most of the times, not most of the times, but well, most of the times, I'm gonna say most of the times, price goes to the OTE. All right, guys, so look here, okay? What do we have? We have this uptrend, right? We put the Fibonacci. Where does price go to? Where does price go to? It goes into the OTE and goes up. Okay, and look at this. Look at the next one. Swing low, do swing high. Like this. Price goes to the 0.62 and continues higher. And let me find it on a different time frame. Let's go to the 1 hour time frame and see if I can find it something here. Okay, so look at this uptrend right here. We put the Fibonacci, where price goes all the way to the 0.62. Okay, here it does again. Here it does it again. Price goes into the OTE. Here it hits the 0.62, a little bit more. And right now, guys, to be honest, I cannot really find, but just backtest this. Go to the market, go to any market you want, any market that you use, and backtest this a little bit. Calculate it yourself. You're gonna see that more often than not, price goes back to the optimal trade entry. Right now, I don't want to be putting a Fibonacci retracement everywhere to see if it goes. Well, here, look, in this downtrend. Where does price go to? Price goes all the way. Does it hit or not? It doesn't hit the OTE. Well, this is what I mean. It's kind of hard to to do this now, but backtest it yourself and you're gonna see how much it happens. And there is nothing else to say, literally nothing else. Just, like I said, really important, don't use the Fibonacci retracement alone, combine it with other stuff, right? It's a helpful tool. And yeah, all right guys, and that's it for this video. I hope you enjoyed this video, I hope you liked it. Hit the like button, hit the subscribe button. If you have any questions, let me know in the comments. Let me know what you want the next video to be about. And that's it, see you guys in the next video.